All right, guys and gals, about that time of day again here, folks. Time to get back to work. Did you miss me? I missed you. Sorry to leave you hanging yesterday, but it's time to get back to work here tonight. It's Thursday evening. It's April 23rd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a jam-packed video in store for you guys and gals tonight. Got the charts all loaded up in the background. As you can see, we got some oil, some S&P, and some gold. We get a lot to cover as we finish up the final Friday of the month of April. And speaking of the final Friday, tomorrow, of course, being a Friday, I want to make sure you know when the big news is, when to be at your desk, and when to be sitting on hands tomorrow. So we'll grab that calendar as well. So as you can see, charts are ready, calendar's ready. I'm here ready. I know I missed you last night. I apologize once again, but I'm back here tonight, and I'm glad to see you here right there with me. Before we jump into the video tonight, though, I just want to remind you, if you haven't done so yet, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish on this video every week. Don't forget, if you have any questions, drop those questions in the comment section below. And as always, if you tune in every evening to watch this video newsletter, thank you so much for tuning in. Hit that thumbs up button for me if you guys love the video every evening here on the newsletter. All right, let's not waste any more valuable time. Time is ticking. Let's kick off tonight's video by checking the calendar for tomorrow, courtesy of Econo Day. Let's grab the economic news calendar and see what we're dealing with here tomorrow. Tomorrow, of course, is the final Friday of the month. Now, that may not sound like a big deal, but it is a big deal if you work for a big trading firm. The final Friday of the month is notorious for that day where everybody starts to panic and try to make sure their numbers are starting to look good as they go into the end of the month. Now, you know, we may not be working with these big trading firms, but these big firms are the ones that move these markets, right? We are, as day traders, just a little fly on the back of these elephants, right? And of course, the elephants will likely have some work to do tomorrow to make sure they put themselves in a position where they can capitalize into the last couple days of the month next week. Now, we'll talk about how to trade the end of the month next week, because that's going to be a big important factor for next week. But tomorrow is a finally Friday session. Now, of course, anytime I have a Friday, I always know it's early in, early out. So, of course, we get together every morning at 8 o'clock, and we usually trade all the way through to 11:30 a.m. Eastern Time. Tomorrow's a Friday, though, so we're probably going to be watching closely after 10:45, 11 o'clock. You know, you've really got to be having you got to have a good reason to be trading, a good amount of momentum, a good amount of personality to be trading after 11 o'clock on a Friday morning. So my sweet spot tomorrow will be that 8 o'clock to 9:45, and of course, to 10:45, and we'll be in our trade room every morning, right, Monday through Friday, doing that together here. Now, we get some big news tomorrow, though. Got the durable goods orders here at 8:30 Eastern Time. That is the big news on the schedule for tomorrow. But come on, I mean, is anybody really not obsessed right now with, of course, the reopening of the economy, right? With the price of oil, you know, these are some big kind of underlying themes or underlying veins running through these markets right now. If you haven't noticed, and again, tomorrow we got news at 8:30. I just don't think that's going to be the big headline tomorrow. We're seeing a lot of, I would call it turbulence a little bit back and forth as far as the plan to reopen, at least here in the U.S. You've got one side of the aisle that says, let's get back to business. You get the other side of the aisle that basically says, let's keep this thing locked down until coronavirus is completely extinguished. So we definitely have a bit of a battle brewing right now with the reopen group and the stay closed group. And of course, that may start to trickle into the markets tomorrow if we start hearing headlines out of the White House, headlines out of the larger cities in the U.S. and around the world. That is something we are watching closely on the news feed tomorrow. And again, the price of oil. You know, this oil price, if you haven't noticed, has really been kind of the It's been the backbone of this market the last couple days. If oil's catching a bid, if oil is strong, right, the S&P and the gold seem to follow right along with it. So, you know, normally we don't talk a lot about correlations because they are very touch and go. You know, correlations are difficult to put your thumb on. They're difficult to keep using. But for right now, we'll keep hitting that until it stops working. The oil price definitely is something we've been watching and kind of using as the backbone. So, you know, sideways oil, sideways S&P, bullish oil, oil, bearish oil, bullish or bearish other markets. We'll be leaning on that tomorrow as well. So kind of a recap here. We got a lot going on right now. Got a big, potentially extra volatile Friday session, the last Friday of the month. We also, of course, know Fridays are early in, early out, and we know there's a lot on the, again, kind of a lot underlying these markets right now. Everybody's waiting to hear more updates about when will we start to reopen the economy, right? How does the price of oil do? And don't forget, guys, tonight we'll put the plan together. We'll grab the charts here in a moment, but tomorrow morning and every morning we get together in our trade room at 8 o'clock Eastern time and we trade this stuff together. What I'll do is I'll put the membership information as long as all the links to get registered for membership and to come out and join our trade room. I'll put all those links for you right in the description of this YouTube video. If you're on the blog right now, I'll put a big button right below the video tonight on the trading blog. So grab those links, get registered, and we'll see you guys in the trade room 8 o'clock Eastern time, Monday through Friday. Let's keep going though. Now that we know the schedule for tomorrow, early in, early out, let's grab some charts and let's see what we have here on the charts tonight. Get some oil, we got some S&P, and of course you'll notice we got some gold here. Let's start with the oil. Everyone's talking about oil right now. As I mentioned earlier on this week, oil, of course, just incredible historic move lower, and you can definitely see oil has picked up a little bit of momentum here as they try to make that move back up to that big round number at 20 bucks a barrel. Now, what do we know about oil right now? We know we're bullish. That is one thing that we can certainly see a mile away here on the oil. What does a bull market tell me to do? Bull markets tell me to find levels of support to be a buyer at. And so what I've done is I've marked up some support trend lines. I've marked up some hidden channels, right? And of course, you can't really miss this wedge, right? That wedge we have running here in the middle. I also like that reversal line around 14. That's a nice level there, right? That big reversal line. And you'll notice I've marked up that range. That really dials in that whole area right here. Think about it. You've got that low of the hidden channel. You've got that reversal line. You've got the trading range all stacked up right around that $14 a barrel. I'll tell you, if I had it my way, I'd be buying off that 14 bucks a barrel tomorrow with the right setup pattern. So that's definitely something we are watching here as far as support. And, you know, because we know we're bullish, you want to buy at support. It really has a lot to do with, you know, do we stay inside of the wedge and go higher, right? Almost like a shallow pullback. Do we go back down to this trend line? Do we get a deeper pullback down inside the battle zone? You know, these are three scenarios I'm watching for here to be a buyer. How do I trade inside the wedge if we keep rolling higher here? How do I trade a shallow pullback? And how do I trade a real deep pullback now as we go? Those are three very important scenarios you want to think of if you want to be a buyer tomorrow. We also have a good reason to believe that that big round number at 20 bucks a barrel, that's about as juicy of a round number, a psychological level as you're going to get there. That is also going to be a magnet. So how could I trade this as we go higher? You know, how can I make some money without buying too high, without getting too aggressive? How can I buy it as we run higher there as well? Because you can see a lot of spots up there we're watching around 21, 22, and 23. So we got a lot to cover here tonight on this chart. The first thing is, let's talk about the buyers, then we'll talk about the sell side, because there might be some opportunities here to be a seller as well, because this could be easy come, easy go if we hear some more updates tomorrow regarding this price of oil. Now, let's take a look first here at this price wedge. Now, wedges are tricky because you got to remember it's going to get narrower as we get closer, right, in that wedge. As we go up the ladder here, this gets narrower. Now, anytime I find myself in a wedge, I know the market's going to want to rotate back and forth from top to bottom, bottom to top, but I got a big problem, right? There's not a lot of space up here. So my favorite way to buy in a bull market, coming off a level of support, of course, off the low of that wedge, right? My favorite pattern to buy when I'm worried about buying high is called a trap pattern. So as we go higher here, if we don't get a pullback, as we go higher, think about a 1, a 2, and a trap entry long. This would be a really nice setup. I hope we can get something like this. So in the short term here, overnight, as we pop higher, let the bears try once, let the bears try twice, and I'd love to see if I get a little trap, right? It's basically a bear trap off the low of that wedge. Target, of course, is up to the high of the wedge, and if I have an extra bullet left in the gun, I can leave the final target up to that $20 a barrel, or let it run up into my runaway zone around that $21 a barrel up overhead. That is one setup, basically a trap setup off the low of that wedge. The reason why I want that trap is because I'm concerned about overhead resistance, and my favorite setup to avoid overhead resistance is going to be a trap. Now, you'll also see I've got this trend line here. And I think this trend line is pretty reliable here too. I love how this trend line looks. What I like most about it is as we run lower here, we should be able to fool some of these sellers. You know, I would imagine as we run lower, right, we now can kind of fool those bears into thinking this thing now is bearish. And what I'm hoping we can do is be able to catch some of those sellers selling off the moving average and then giving us the ability now to basically buy right into those stop losses off that trend line. So we know where the trend line is. I'll make that nice and juicy there, right? No, we know where that trend line is. If I can get this thing to make that run lower now, I can get the moving average coming over. I can look for my seller failure pattern into a bullish pullback pattern off that moving average for a retest of the high. Now, if we get that pullback, the objective now is not so much up to 20. The objective now is get back up to retest that high, right around that $18, right, a barrel area. So again, this would be a little bit different pattern, a seller failure pattern, right, coming off the moving average, and then into a bullish pullback pattern coming off the EMA, going back up to retest that high. Now, what if we get what everybody wants, right? What if we get what everybody wants here? If I kind of lighten that bad boy up there a little bit for us here. Again, like I mentioned earlier, I really like this area right here where you've got this, again, it's a prior swing, it's a range down there. Anytime you see a range on the chart, you always know there's a big magnet, right? So that range is going to be a magnet, and hopefully that magnet is strong enough to drag us down here. Okay, I've also got, if I line up those highs, line up those lows, right, I now know that is a hidden channel level as well. Now, the problem we're going to have on this is going to be a little bit bearish, isn't it? This is not going to be as bullish as we'd like it to be. So as we pull back down into that 14.5, 14 even area, this momentum now is going to feel pretty bearish, right? It's going to feel pretty bearish as we go lower. What's the best setup to be buying off a support level again, but when I'm worried about too much momentum? It's a failure pattern, but it's more conservative. It's called a nested failure. Instead of just simply buying right into stops of those bears like I would on a shallow pullback, what I'll basically do is wait for them to try once, wait for them to try twice, and once I have, and again, I call these a nested failure, because it's kind of like it's a pattern inside of a pattern, like those nested dolls, right? Those Russian nested dolls. Now I know exactly where their stops are, and most importantly now we know with the bears trying twice off the moving average now we know all the bears have that rope wrapped right around their neck, and if they fail, we can now buy right into those stop losses. Now, a lot of times those nested failures off those really deep pullbacks, a lot of times they're going to really rip higher. You don't want to chase after it. You got to remember, they're going to want to go back and retest that high, right? Those deep pullbacks, the objective is to retest the high. What's my favorite pattern to avoid buying into resistance? We just talked about this. It's a trap pattern. Remember that from earlier? That was the first one we talked about with that shallow pullback inside the wedge. So that now becomes the follow-up setup. It's basically a nested failure, okay? It's a nested failure off the low, and then it's a two-try trap pattern as we run back up to retest those highs. So a lot of opportunities here for the bulls. Now, we're going to cover all this again tomorrow in the trade room. We'll do it all together tomorrow in the trade room and every morning. If you're not there with me tomorrow morning, though, make sure you grab the free trading course. I'm going to put a link up here for you in the upper right-hand corner. You know, even if it's just to make sure you get enough knowledge to follow along with me on this video every evening. I publish this video Monday through Thursday evening to make sure I'm ready, my clients are ready, and I bring you right along with me here every evening. But most importantly, though, grab the free course, learn my favorite setups, learn my favorite strategy. I'll show you hundreds of examples of how we apply that strategy to our favorite markets. It's all linked up there in the upper right-hand corner. And guys, everything I talk about tonight, I'll put all the description. I'll put all the important links in the description of this YouTube video, so don't be afraid to go in there, grab your membership link, grab your free course link, right, and make sure you come out and do it with us. Now, what if we don't pull back? Right? What if we don't pull back? You know, we get a lot of bullishness right now in this market. What if the market makes a rip going higher here? At what point can I start to buy this? Well, I need a breakout, basically. We're sitting right underneath that big measured move. That is a major level of resistance. So I need something here now that gives me some sort of proof that these bulls mean business. And what that would mean would be either a 1, 2, 3 breakout, which if I can draw here, right? Strong move up, pull back to the moving average, strong move off the moving average. If I can get that 1, 2, 3 breakout, now what I can do is I can mark up that high, I can mark up that low, and I can now look for that buy off the low of that hidden channel. Now, it'd be great to use the top of that wedge, but it's definitely not required. So we call that a 1, 2, 3 breakout into a hidden channel pullback. Or another option would be if this thing really starts to, right, if the animal spirits are really starting to chug higher here, if we really run higher and you see that shallow pullback, doesn't pull back to the moving average, higher high, right? Shallow pullback, higher high, trap low. That's the good stuff right there. And again, it'd be nice to get it off the top of that wedge, but definitely not required. So again, if I see a real strong rip running higher, shallow pullback, barely touches the moving average, we get that higher high in price, right? Little trap low there and run this thing back up into our runaway zone. So now we get a pretty good plan here, I think, for the buy side, right? We know what we're looking for to be a buyer. Now, how can I sell this market? Well, the first thing is I can try to pick a top up here if I want. It's going to be a little bit aggressive. Well, actually, it'll be a lot aggressive right now. My favorite reversal pattern is always going to be a crown reversal. Okay, this of course has a very specific tone to it, and you'll notice here it requires the buyers to try once, buyers to try twice. So as we go higher, right, the buyers try once in the pullback, they fail to retest. We go lower here, the buyers try again, and those traps up there, okay, that is a reliable, it's the most reliable of all the counter trend setups. So please take that, right? Take that for what it is. Relatively speaking, it is a reliable reversal pattern, you know, but again, keep in mind, reversal patterns are notorious for being less reliable than with trend patterns. So if you do like picking tops in a bull market, that will be a setup to look for tomorrow. Not exactly my speed on these types of markets, but that is something to consider if you want to be a seller. Or I think the one I will be looking for, though, is can I get a strong move down into that battle zone? Can we hold that pullback off the moving average, and can we run? Because if we can get a strong push down and run off that next pullback, now we're on. Now we know where they want to go. We know we got that next big round number at $10 a barrel. I can mark up that low. I can mark up that high, and I can sell off of that high. Again, this is that 1, 2, 3 breakout I was mentioning, right? Strong move down, pull back to the moving average. Got to hold the pullback. Once we get that pullback to hold, then we get the run. Bingo. Now we know we're bearish, and now we can start getting short off the highs of that channel. So guys, that's the pattern I'm looking for tomorrow. I get the bull side covered. We got to get a reversal to the downside before we can start considering this, right, to be a bear market. And of course, tomorrow morning, 8 o'clock Eastern, every morning, we'll see you guys there with me in the trade room. Let's keep going here now. How about some S&P? S&P coming up next. S&P, a very good example of a market that was very much linked up with oil for the beginning of the day today. It has since fallen apart, but it was a very good example, though, on the S&P today of how, again, how the backbone of this market was the oil price. The fact that the oil kept on rallying, kept on propping up the S&P as well. We saw that firsthand today in the trade room. Looking now at the charts here on the S&P, what do we know on the S&P right now? We know that the market finished up yesterday and kind of started off today and was pretty much a trading range. And a trading range acts like a magnet, as I mentioned earlier, right? Trading ranges, think of them like magnets. What goes up oftentimes comes down. What goes down oftentimes comes back up. I can also take the size of that range and create my sell zones overhead, my buy zones below, and I can use the amount of the move above the range, this is the kicker for tomorrow, as the amount of the move below the range. That pendulum swing, as we call it, puts us now for a target at 27.40 and a quarter for those sellers. The bears want to get to 27.40. The bulls want to get back up to retest that 28.36 and three quarters. So the bottom line is the range is the most important thing on this chart right now. It's going to act like a magnet. And of course, that magnet, we want to sell high and buy low as we go tomorrow. Now, who has control of momentum right now? Because you can't talk about setups. You can't even think about being a trader unless you know momentum. We were bullish, that is for sure. There's definitely no doubt about that. We definitely were very bullish here as of about, up until about noon this morning. But then you'll notice here, once we got that failure, right, once things started to fall apart, the bears now clearly have the short-term momentum. I'm a day trader. I don't care too much about long-term trends. I'm a day trader, so all I look for is who has control right now, and how can I look to pick the pockets of people who don't understand that control. That is ultimately the way most day traders are going to work. So we know there's a range. We know the bears have the momentum on their side. Let's focus first on being a seller. Anytime I have a bear market into a range, I want to focus on these areas right up above that high, use the size of that range, and that's going to be that'll be the general location where I want to be looking for resistance levels. Now, speaking of resistance, I've got these lows lined up. I bring up to the highs here. That's one spot there to be a seller, right? Kind of a shallow pullback, right? We talk about shallow pullbacks on oil. Very different pattern there than I would use on this trend line overhead. That trend line, that's another level of resistance, but it's a much deeper pullback now. We'll use a different setup pattern for that one. And then you'll notice I left on kind of this little bit of a clue here, right? If the market rolls over on where I'd like to get short, if we keep rolling, because that pendulum swing is going to be a very big, it's going to be an objective for those sellers. So those are really kind of the big factors here I'm watching for right now. So first of all, let's talk about selling off the shallow pullback, right? So there's my, again, kind of like a little hidden channel here, right? I want to be a seller off that high. Now, as I try to be a seller off that high, we'll probably simply look for more of these buyer failures up above the moving average, right? So as the market tries to make its way higher, we wait for buyers try to buy off the EMA. We know the market is overall bearish right now. We know we've got overhead resistance up overhead. We also know exactly where their stops are, and we can sell right into those stop losses. One of my favorite ways to trade range markets is to wait for the market to poke its head up, wait for buyers to try to buy above the moving average, and sell it back down into that trading range. Now, we may not just get that shallow pullback. We may run, right? We may go all the way up now, right, into the top of that battle zone, up into that trend line. I mean, in all reality, right, this could be a very sharp correction here. If we see a real sharp correction now, what's the best sell setup for me to be to sell short off resistance, but with a little bit more bullish momentum? I like to use that nested pattern, right? That one, that two, and once I see those bulls trying once, trying twice, Yeah, now I know where their stops are. You can see a good example back here, right? Look back in this area here, right? We make that big run up. Buyers try once, buyers try twice, and then the bottom falls out of it. And that's exactly what I'm looking for here, right? Looking for the same basic idea as we go up, right? Above that channel, but into that falling resistance trend line. Okay, that is a very important part, right, of this plan. Now, what if we go lower here, right? What if we go lower here? As we go lower, this is where we really got to get some strength, right? So if we can get this market running lower here, now I'm going to mark up that low. I'm going to bring down that high. And this is where we're going to really have to make sure we get some good push. We've got to get a strong shot lower. Okay, strong shot lower through that range low. We know where they're trying to go, right? We know they're trying to go down to that pendulum swing at that point. And now I'm looking for, right, that pullback. And usually what's going to happen is when I get back to that high, we're usually going to be just, let's do this way. Let's make that my channel, make that color there. That way you kind of see how it looks here. So again, we get that big, strong push down, right? Moving average comes over. We get back up into that channel. Buyers try to buy above the EMA, two-try failure pattern into a bearish pullback. And we're looking to short down to that pendulum swing target. Again, it is a buyer failure pattern. The same patterns I'm talking about up here, I'm applying it down here now. Again, remember, momentum is very bearish at this time. That strong move lower, it's a buyer failure, right, into, right, a buyer failure into a seller pullback. All of them coming just above the moving average, off the high of that channel, and again, leaving that target, right, for that pendulum swing. Now, there's one more setup here, and that is if this thing falls apart, right? So if we really see this thing start to collapse here in the overnight, if you're in Europe, if you're in Asia, or you're a night owl here, right, on the west coast of the US, if we do get this to really make that run lower, real strong, watch for that shallow pullback, that lower low. It's that lack of a real deep pullback in that lower low that usually gives it away. Mark up that high. Now what I'll do is I always like to grab, right? Always I try to incorporate this off the high of a channel, right? So trying to find some additional resistance there for that two-try trap pattern. Very high reliability trade if we can get that momentum running as well. So now I think we got this thing covered here. We know what our job right now is for the sell side. How can I buy this market now? There's a couple options here, really. Really, the big thing is if we can sit inside this range for a while, that will kind of clear off all the momentum. So one of the big things we can do for buyers tomorrow is if we can start going sideways here for a while, right? If we sit there overnight, nice sideways range, moving average flattens out, that will kind of level the playing field a little bit. We'll still have a little bit more bears than bulls, but it will definitely give us a lot more confidence that this momentum is really sideways and not just bearish. That's one big thing I think we want to keep in mind here for tomorrow. If it does go sideways, right, I'll still look for those buyer failures, right, and sell above the highs. We'll still do that. But again, if you want to be a buyer tomorrow, I really think having this thing go sideways here for a bit will be really beneficial. So if we go sideways on this, we really kind of, absorb a lot of that momentum now. Now I'm thinking we've got some opportunities now to buy underneath this low. And to do that, if we can make this run lower, now I've got, again, a little bit more bearishness than I would like, but that momentum will be zapped, right? Well, not all of it, but it'll be, it'll be absorbed a lot by that range. And now I can go out and I can start looking to pick that bottom with a 1, with a 2, with a nested failure. Remember, when you're trying to go against the overall momentum here, it's important that we wait for those bears. As I always say, let those bears dig their own grave on this, right? You don't want to be buying right into those stops because again, the overall momentum is bearish at that point. But that will give me a nested failure. And then just remember, you want to stay out of the middle. So one of the hardest parts on this could be if we, for example, let's say, for example, right, we go up, we go 1, we go 2. This would be an example where you'd want to trap because you don't want to trade inside the range. Does that make sense? You don't want to trade inside the range there. Whenever I'm worried about trading too high, what's the pattern? A trap low. Does that make sense? Am I explaining this correctly? Hit that thumbs up button for me if this makes sense to you. The trap setups are great to avoid levels of resistance or levels of support, right? Hit that thumbs up button for me, and you got to make sure you drop me a comment in the comment section if you don't understand this, because this is one of the key components to day trading, knowing what is momentum and knowing where are we in the chart, right? Where are we? Where is this tree inside the forest, right? Let me know in the comment section below. It'd be great to hear from you on that. So those are some opportunities here as we go lower here to be a buyer. Now, we may also see this, to be honest with you, it may run all the way down and it may bounce right off that low, right? That will be a 1, 2, 3 reversal. I can then mark the low, mark the high, mark the low, and we can buy off that low, right? So if we can get, it may make that run going lower, but then you get that 1, 2, 3 reversal pattern, and then we can buy that next pullback. Again, staying out of the middle of that trading range. Now, how about going higher here? Going higher is kind of the easy part. I can get the 1 strong move up, 2 pull back to the moving average, and 3 strong move off. If I get that 1, 2, 3 reversal, I can mark up that high, I can mark up that low, and I can buy that pullback off the low of that channel. We may not get that pullback in the right spot. For example, it may really run. If it really runs all the way up now, and now we're right up around those highs now, I now know where my entry wants to be, but what's the best type of pattern? Traps, right? Trap, 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 trap. That's the best pattern. Why? Because we're worried about buying into resistance up there. So again, we'll be looking to buy the low of that channel, but we apply a different setup depending on the situation that we're in. Let's say, for example, we make a real strong run higher. We know where they're trying to go. They're trying to go back to retest the high here. That strong run higher now, shallow pullback, higher high, trap low, 2-try trap pattern. Now, guys, again, I'm going to do this again tomorrow with all the clients in the trade room, but make sure you grab that free course, because that free trading course, I go over traps, failures, pullbacks, strength moves. Everybody loves the free trading course. And again, I'll put all the links for membership down in the description of this video. All right, we're looking pretty good here. And keep in mind, if these buyers keep going here, right? If those buyers, if oil catches a bid tomorrow, look at how big that open space up top there. Get a lot of wide open space. There's that weekend gap. It seems like a mile ago, but that was on Friday night's close, right? So we got all the way up there. If they can get this thing ripping, we've really got a lot of open space up there to run here tomorrow. Might not be it. Again, tomorrow's a Friday, so it's always kind of a question mark, right? And of course, if we get a 1, 2, 3 breakdown here, we may also see some shorts right on the way down to that big low. Right now, though, I'm watching the pendulum swings. Those are my short-term objectives, and we'll know more tomorrow once we see more information. Let's keep going here. Let's wrap this sucker up now on the gold, the yellow metal here tonight. Now, what do we know about gold right now? Well, we know gold is very much following the price of oil, as we talked about that. What else do we know? We're very bullish here on gold. We've got a trading range on gold. Now, you might call this, potato, potato. You might call this an expanding triangle or a megaphone, right? So that is a very big clue on this. It looks to me like, if you were to kind of zoom in on this guy, it looks to me like top right there, wick right there, big clue right there. That is a sore thumb right there. That sticks out like a sore thumb. And of course, bounce, bounce, and bounce right there. It looks like a range to me. Now, what do we know about a range? What is a range? A range is a magnet, if I can get my keys to work here, right? Ranges are magnets. What do we do with ranges? We find our buy zones, we find our sell zones, and we ask, where is momentum? What is momentum right now? We're bullish. Make sense? So if I'm bullish into a trading range, it's a lot better idea for me to buy and use that magnet overhead than try to be a seller and try to use that, right, and use the magnet underneath me. So I know I'm bullish. I want to be a buyer at a level of support. So I know I got some support down here. I love triangles. Triangles, or as I was corrected last week, expanding triangles, right? Regular triangles are like this. triangles and wedges come together. These are expanding triangles, right? Once I find a range, again, I'm trying to find support. That makes for great support. I've got these kind of triple bottoms down here. That makes for a great support. In fact, if I was to guess tomorrow, I would imagine this is where most buyers are probably waiting down here, is below that low, because they opened up this morning, and again, I think the price of oil kind of swept this all up here today, but they never really got the ability today, right, to get that big deep pullback. So I definitely think you see a lot of buyers waiting down there below that 1730 area, especially since we've been on such a tear, right? Look, there really haven't been any, besides these last two back here. There really wasn't much available there. So again, I would imagine a lot of buyers waiting down here. So got two key levels of support there. And then I'm going to throw a little bit of a cherry on top here, because I couldn't resist. These two highs up here are just dead giveaways when you line them up with that high back there. So line those two up. It's not the prettiest low, but that really looks pretty good down there. This is one of those deep pullbacks that I hope we get. You know what I mean? We may not get that deep of a pullback, but you'll notice though, the low of that hidden channel, mark that up with that trend line, mark that up with that triple bottom, put that together now with the range expansion, or as we call it, the range expansion here, and you've got yourself a hell of a lot of bullishness there, a hell of a lot of buyers that are likely looking to react at that area. So 1735, 1730, really looking like a very attractive area on this chart. Now, a lot of this has to do with, how deep is this pullback, right? Is it a relatively shallow pullback? Is it a relatively sharp pullback, right? Do we sit here going sideways for a while and then pull back tomorrow? Those are some definite things we want to be aware of. We also want to keep an eye on where might this market be headed if we're trying to go higher. If we're trying to go higher here, you can easily see this as top here, right just above the top of that range. So I definitely don't want to buy into that area, but I'll tell you, if they can poke their head through it, there's a really juicy top up there, 1788, 1800, if this really gets cooking right tomorrow morning. So we get a lot of support. We've also got a bunch of resistance levels here overhead. Let's talk about the buy side here first. We know we're buying. Stay away from that middle. Let's talk about shallow pullbacks here right now. So I think, the biggest variable I think at this point is going to be, do we go sideways here for a while? Because if we go sideways for a while, now this trend line becomes a lot deeper. Okay, and that's going to mean a lot of trouble for aggressive buyers, right? You don't want to get too aggressive on that. If we just simply pull back right now, that shallow pullback now, I can look for that seller failure into that bullish pullback. Now remember, you're not going to want to buy inside the range here. So if we do get that pullback down now, moving average comes over, I got my sellers coming in trying to get short off the EMA. I'm down inside my support level here now. I know where stops are. I can buy into stops, but also too, don't forget those traps, right? Like I mentioned earlier, keep your eyes on those traps, right? It's a seller failure into a bear trap, basically, right? Two-try trap pattern as we go back up into that trading range. What if we really take a nosedive, though? If we really take a bath and make that run lower, now you're thinking nested failure, right? Remember that from earlier? How do I buy? It's still a bull market at that point, right? I wouldn't call that a reversal just yet, but I do want to be, I am going to be a little bit concerned about these bears here. What I'll look for is one try for the bears, two try for the bears. Once I've got those two tries now I know where stops are, and I can buy right into those stops. And remember, when you get these deep pullbacks, it's easy come, easy go. So the bigger the move down, the faster it'll snap higher. You don't want to chase it. Look for that two-try trap. And that pattern is usually going to be coming off of the low of a channel. And so think of it like this, right? Grab that. Again, it's a failure pattern into a two-try trap pattern. Mark up that high, mark up that low. and you're really kind of I always want to buy at support, right? I'm either buying at a channel support or a trend line support or a channel support. It doesn't matter. I just want to combine that entry setup below the range at that level of support here. So that covers kind of the shallow pullback. It also, of course, covers the much deeper pullback. I also want you to be aware too, again, if we go sideways here. So if we go sideways now remember, now those lows get a lot tighter now. So now as we go sideways, if we do see these buyers kind of run out of bullets and the market starts to pull back, yeah, that momentum has definitely been absorbed a lot, but it's still, again, we're still going to see buyers waiting down here because this will be the first deep pullback we've seen here in a couple days. Moving average flattens out. Again, try to incorporate these levels of support off of that low. So as we pull back now, I wait for bears to get caught trying to get greedy and selling into those, right? Selling off the moving average. Wrong place to be selling. Wrong place to be selling. I now know the bears are committed. The bears are not going to like, right, being stopped out. They'll become buyers as those stops get run. And of course, we can look for, depending on where that setup happened, a pullback if I can get in before the range, or a trap if I have too much, right, if I'm too close back into that trading range. Those are some opportunities we're watching here on the pullback to the buy side. Now, how about the buy side of the upside? Remember, we got that big range top over here, right? That 1767.9. So I need to get either a breakout or I've got to get a two-try trap. Now remember, it's not enough to get a strong move. We see a lot of strong moves that fail and come right back down to the range here. So as we go higher, don't go getting greedy on me here and being too aggressive. You can, but remember, the money that you make getting greedy on this, the money that you make today by being aggressive today is the money you'll give right back tomorrow when the odds catch up to you. You have to remember, trading is not a game of onesie-twosie. It's a game of hundreds of trades, right? So if you make your money being aggressive today, you live by the sword, you die by the sword. If you get too aggressive to buy those breakout pullbacks, yeah, this might work on you, but the very next time, right, or next week, they'll fail on you. And usually we find a way to lose more than we made, don't we? And the account dies a death of 1,000 cuts. We don't want that to happen to your trade account. I want to make sure you're waiting for the most reliable setups. So I skip that first pullback. I wait for the 1, 2, 3 breakout. Then it's on. Then we can mark the high, mark that low, and I can buy off the low of that new hidden channel. We may also see, this is gold we're talking about, very, relatively illiquid. If it really rips and runs higher here, right? If it really races higher here, kind of feels like everybody's buying it, watch that shallow pullback, look for that higher high, and that higher high gives it away. Shallow pullback, higher high, it's just a matter of time if we can get that trap. And again, I always try to find some additional level of support to combine with those setups. We know where they're trying to go. It's just a matter of, can they give me some proof as we go higher? Now, how can I sell this market right now? Right? What's a bear want to do? Well, the first thing is bears have to consider, if you want to be a seller, you've got to sell at those highs. Now, remember, we're very bullish right now. So what's the most reliable way for me to sell counter trend? Not momentum concern. Remember, there's a big difference between me buying on a deep pullback. That is momentum concern because we're so bearish on the pullback. But very different than, how can I sell a reversal? This is not a bear market, right? It's a bull market. So as I go higher here now, right, again, I want to make sure I'm right up into that high, right up into those highs. What is a possible short off the high? Wait for the buyers to try once, go lower low, try twice, trap high. We call this a crown reversal in our trade room, right? Really what it is, it's a nested failure. It's a nested failure with a trap on it is what it is, right? So 1, 2, and then trap high. All right, and again, we talk a lot about these failure patterns, trap patterns inside the free course, and we trade them together every morning in our trade room. You can find all the information once again in the description of this video. So again, counter trend trades are not the most reliable setups. If you're a one contract trader, these types of trades should be off limits. right? If you're a one contract trader or if you're a rookie trader, your goal is to get your winning percentages as high as possible, and taking counter trend trades are simply not going to get you there in the shortest period of time. What I'd rather do is, if I'm a rookie trader or I'm a one contract trader, is wait for more reliability. Wait for that strong move down, wait for those bears to come in and hold that pullback and run. Right? I don't care about that channel any longer. Now, if those bears hold that pullback and run, now I know the odds are very good there'll be a lot of bears waiting off the top of that hidden channel. Right? Might even get lucky. Maybe we get that trend line coming down, a 1, 2, 3, and we can line that right up and use that trend line now as the underbelly, right? Use kind of the underbelly of that trend line now as a key area of resistance. Isn't required, but man, it wouldn't hurt. It definitely wouldn't hurt. Now, once we get that reversal now for the bears, where are they trying to go? They're trying to go back to 1700. Now, 1700 isn't just a cute little round number there. There's a lot of volume that traded right there. A lot of overlapping candlesticks there, right? If you were to load up a volume profile on this, you see a lot of volume down there. I would assume, I don't use volume profiling. If you know how to read a chart, you look at these overlapping candlesticks, right? A lot of volume down there. And the fact that it's a big round number means, again, anytime you get a range, what is a range? A big magnet. And so if I can get that 1, 2, 3 breakdown, mark that low, mark that high, selling off that high, targets down at that 1700. Boy, oh boy, it feels great to be back here with you guys and gals tonight. I missed you last night. I'm not gonna lie. I feel like I missed my buddies last night. So hopefully you guys did well out there today. I apologize for leaving you hanging here again yesterday, but I'll make it up to you. I'll bring the heat every evening on this newsletter. Wrapping up for now though, don't forget to register for our trade room as a member. I'll put all the membership information for you guys right down in the description of this YouTube video. Also, if membership isn't quite right for you, at the very least, grab that free course as part of our free trial. And if you have any questions along the way, don't be afraid to call me or email the office here, or use that live support tool on the right-hand side of the website. Once again, wrapping up here for now. Tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern time. I want to see you there with me. Grab the links to get started in the description of the video. And as always, keep in touch, all right? How'd we do out there? You enjoying the video so far? Did you learn something? Any questions? Drop those questions in. Hit that thumbs up button. And don't forget to subscribe. All right, guys, that's it for me tonight. I'll be back, not tomorrow night. Got a Friday, so tomorrow. Be back next Monday with another edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other this weekend. And be here next time. Adios, amigos. Bye-bye for now.